5 a.m. in New York City. Good morning. I'm Vonnie Quinn with your Bloomberg Brief. Here's what you need to know. On track for a fresh record, futures in the green with September income and spending data on deck, along with a fresh look at December's UMISH survey. Hollywood giants at the negotiating table. Warner Brothers is said to be in exclusive talks now with Netflix to sell its film and TV studios and HBO Max streaming service. And Fed Chair frontrunner Kevin Hassett says the FOMC, quote, should and is likely to cut rates by 25 basis points next week. And that could be setting the tone today as markets await what is very likely to be a 25 basis point cut next week. S&P futures pointed higher, NASDAQ 100 futures pointed even higher. We've had a couple of down days this week, but the S&P is on track to eke out a gain this week. The NASDAQ 100, in fact, on track to be up more than 0.5% this week already. And the Russell 2000, it may look like futures are pointed lower, but it closed at a record yesterday. An indication that perhaps finally this rally is broadening out and maybe it's a more permanent broadening. We have massive expectations for earnings for that particular component of the stock market. Let's take a look at bonds because, of course, we do get that data today. Personal income and spending is going to be stale. It's for September. UMISH survey can be distorted now by political leanings. At the same time, we might get just some kind of read on the consumer. The 30-year yield climbing a basis point since yesterday. The 10-year yield now back above 4.10 and the 2-year yield at 3.52. All right, let's get to some individual movers. We'll get over to London and good morning to Valerie Teitel.
Good morning, Vonnie. Let's start with a check on Warner Brothers at Netflix. Warner Brothers is trading higher off the back of this news that they have entered into the exclusive negotiations with Netflix. We're up 2.8% on Warner Brothers. Netflix, on the other hand, is down 0.6%. Maybe some of this positivity in the Warner Brothers shares has to do with Bloomberg reporting that Netflix has promised a $5 billion breakup fee if regulators smack down the deal. So still some questions to be asked about this deal. We still don't know what kind of prices we're talking about, but it does seem that Netflix wants to promise Warner Brothers an upfront fee if the regulators do decide that the deal isn't to go through. Let's move over to earnings at HP Enterprises. This is a kind of underwhelming report from HPE. Shares are down just shy of 8%. And this is on the back of missing on sales for the previous quarter and giving a weak forecast for the quarter ahead. This is due to some delays in delivering on customer contracts around AI. They had a delay when it comes to a European data center build out and a second delay around the U.S. government shutdown. Lastly, let's end in the beauty sector. Vonnie, Ulta Beauty out with earnings after the bell, up 5.6% in pre-market trade. Their business line into K-beauty, Korean beauty, seems to be really paying off. Sales were up some 13% in the previous quarter. Also doing well internationally with their recent acquisition of Space NK, one of the largest beauty retailers here in London. Ulta Beauty up 5.6%. Vonnie?
All right, a massive rally this year. Thank you to Valerie Teitel. And coming up in this hour, we'll drumbeat to the slew of economic data on deck and that Fed meeting next week with Citi's Veronica Clark. But first, Bloomberg learning that Warner Brothers has entered exclusive talks now with Netflix, a deal that could shift the entire entertainment industry. Joining us now is Bloomberg Deals reporter Manuel Baigori. Manuel, serious antitrust concerns on this one. Geetha Ranganathan of BI telling us that Netflix at least will make the argument to regulators that this will bring down prices for consumers. But will that be enough to pass muster with regulators?
Vonnie, that is a very good point because definitely a big transformative deal ahead of us in the entertainment industry, not just in the US, but globally. So regulators will definitely take a close look at how this may affect consumers at the end of the day. But definitely if Netflix ends up winning this auction over other bidders, including Comcast or Paramount, it will definitely put them in a very strong position. I mean, they're already the biggest out there in obviously streaming, but that will also give them other assets, the TV and film studios, and obviously HBO Max as well, will put them definitely apart from the rest. So, and also a very rare move by Netflix, which so far is not used to making such big M&A transactions. So remains to be seen. The next few days are key to see whether or not this deal gets signed and announced, but it all seems to indicate that that's the direction of travel here.
Yeah, David Ellison and Paramount, though, they are ready for a fight on this one. They are not happy about what's happening here. I mean, will legal ramifications have any impact on any board decision?
Yeah, that remains to be seen, Vonnie. I think one step at a time. I think for the time being, we need to get a little bit more clarity on this auction, on this sale process that has been taking a little bit of time. Advisors have been working non-stop, even over the Thanksgiving break, to try get this across the line. And just look at this massive potential breakup fee that Netflix is committed, reportedly $5 billion. That is quite remarkable, and it clearly speaks to the fact that Netflix is very, very committed to potentially getting this deal. Now, whether or not there might be legal ramifications, it remains to be seen. It's a little bit too early for that to see how it pans out.
Yeah, so many questions to be resolved here, but it is a fascinating one. Bloomberg's Manuel Maigori, thank you so much for joining. In Washington, with the Fed decision next week, National Economic Council Director and Fed Chair frontrunner Kevin Hassett spoke to Fox News about his expectations.
If you look at the communications from the Fed governors and some of the regional presidents, they now seem much more like they're leaning in the direction of a rate cut, which is I believe, the right.
And how much would you like it to be?
In the long run, we've got to get to a much lower rate. If there's consensus around 25 basis points, which it looks like there is, then I'll take it.
Joining us now is Bloomberg's Skylar Montgomery-Koning. So, Skylar, that sentiment seems to be pretty reasonable, right? It's definitely what the market has priced in. We didn't get any indication of whether Hassett would want to continue on with lowering rates, at every next meeting. And, of course, he's not going to be the chair, assuming he ever is the chair, for certain amounts of months.
Yeah, I mean, certainly. And I think something we need to remember is that we've come a long way from the Fed confidence issues that we had earlier in the year. So it's a much more reasonable candidate that's been being put forward now. It's also one member on a committee. And I think what we've seen even more recently with Powell in charge is that we're moving away from the chair being the kind of center stone of the consensus view. You're going to get more dispersion within the Fed, and so that's why we need to watch the dots from this meeting particularly closely. But I think it doesn't necessarily mean that you're going to get this broad dovish shift into next year. And I think particularly for this meeting, you need to highlight that we've already shifted very dovishly. So the first point is you've essentially fully priced a 25 basis point cut, and that doesn't necessarily come. It's not guaranteed by any means, even if it is that far priced. The second point is, as bets have gained that Hassett will be the candidate for chair next year, that's more dovish. Then you also have a terminal rate that's 3%, that's in line with the long-term dot. So it's much harder to get lower than that without serious economic deterioration. So that means on those three metrics, the risks are skewed that you get more hawkish rather than less. I don't think you actually get that shift maybe until you hear some of the Fed commentary, which means it's more of an event for Wednesday.
Yeah, and you make a great point, Skylar, because it isn't for sure that we get a cut next week. The market might think it is, but really, what has changed since the Fed chair said that we are in murky waters, right? There's fog out there, and in fog, you tend to slow down. Maybe you do nothing. I mean, that's what had moved the market originally. Why does the market suddenly think we have better visibility now?
Well, yeah, this is it. I think Powell has had a much more balanced view of where the economy is. But the market is very much taking data dovishly. Now, don't get me wrong, some of the data has been weaker. So if you look at something like ADP, that was definitely on the weak side. But I think we need to take the labor market data with a grain of salt, because we know labor supply is coming down because of immigration. That means you have a break-even rate of employment that's lower. And if you look at the trend, which is arguably more important, something like initial claims, that for this year is trending below your expansionary averages. So that points to relative strength within the labor market. And the market's just kind of holding on to these dovish cues over other cues, especially because you have had inflation kind of go to the back burner with not having its release.
Skylar, thank you so much. That is Skylar Montgomery-Koning there joining us, and much appreciated. And now to Germany. Chancellor Friedrich Merz's ruling coalition faces a key vote in Parliament today. Bloomberg's Europe executive editor, Chad Thomas, joins us for more. Chad, Merz is holding a vote today. He didn't necessarily need to hold this vote. He's taking a huge risk. Why is he doing this?
Hi, Vonnie. Well, he had agreed with the Social Democrats, that's the junior coalition partner that he's governing with, that they would move forward with this pension reform. And they really want to get this off of the docket before the Christmas holidays. They want to get it done with so that they can come back at the start of the year and not have to deal with it. But of course, as you say, it is a huge risk. There are members from within his own party who have indicated that they will potentially vote against it. We're hearing now that there is potentially some 11th hour wiggle room, that the chancellor has been telling people within his party that it's really important that the government can show it can pass this piece of legislation. And Vonnie, it's really not just about the pension reform as such, but it's a question of, can this governing coalition, they just came to power 7 months ago, can they actually pass major legislation? The big issue is they only have a 12-seat majority in the Bundestag, so it doesn't take very many members for to be against something in order for them not to be able to get it through. And they have been struggling with other votes already in previous months, so this is just another sign of the struggles that this new government is already facing.
Yeah, and I mean, he may need some abstentions as well in order for this to pass. He doesn't want to be seen as a lame duck chancellor, and he certainly doesn't want elections of the AFP really rising in the polls. But I want to ask you about the story that the US has been urging Europeans to oppose that EU plan for loans to support Ukraine. We're just sort of hearing about some details of it now, although the US ambassador says he hasn't heard anything about it. What do we know?
Yes, so Vonnie, we've been hearing from sources here in Europe that the U.S. has been urging EU member countries to not back this proposal to use Russian assets for to back loans for Ukraine. Chancellor Merz, he actually, after today's vote, he's flying off to Belgium and he's going to have a private dinner with Ursula von der Leyen, the president of the Commission, and the Belgian Prime Minister. Belgium is really the holdout here in this proposal to use these funds to provide loans to Ukraine. Ukraine is running out of money. They need more money early next year. And one of the reasons why what we're hearing from sources that the U.S. is telling the EU not to do this is they're saying that if they give money, if the EU gives money to Ukraine, it's going to prolong the war. And so they don't want them to move forward with this. They're trying to get the two sides to reach a deal on peace.
All right, Chad, thank you so much. We'll see how things progress. That is Bloomberg's Chad Thomas there in Berlin. Now to other top stories trending on the terminal this morning. President Trump publicly declares support for Defense Secretary Pete Hegseth despite a string of missteps and controversies. At a cabinet meeting on Wednesday, the president said, quote, "Pete's doing a great job." The comments come after a Pentagon Inspector General found that Hegseth risked endangering U.S. troops by sending sensitive information in signal texts. NVIDIA challenger in China, Moore Threads Technology, jumped 425% in its Shanghai trading debut after raising $1.13 billion. That marks the biggest first-day pop for a major IPO since China's 2019 reforms. The company's listing comes as optimism over China's drive for tech self-sufficiency intensifies. And European nations look set to shorten the length of their borrowing as an overhaul of the Dutch pension system reduces demand for longer maturity bonds. Changes may be announced in the coming weeks as governments unveil bond issuance plans for 2026. Coming up, we're going to bring you our exclusive conversation with Bank of America CEO Brian Moynihan. That's next. This is Bloomberg. This is Bloomberg Brief. I'm Vonnie Quinn in New York. Bank of America CEO Brian Moynihan is confident in the U.S. economy being driven by the consumer, but is worried about non-tariff barriers in certain regions, such as the European Union. He spoke with Bloomberg's Francine Lacroix earlier.
The U.S. consumer is doing fine. And so for the month of November 25 versus November 24, the amount of money are 70 million consumers who's pushed about $4.5 trillion plus in the economy every year. They pushed in about for that month about 4.5%. And so it was good, and around the Black Friday in the U.S. and the Cyber Monday and all the things they talk about, the spending was solid and good, and it's consistent with a growing economy. Our team has economy growing next year at 2.4%. So Candace and her team, who are the best in the business, that's their thing. But everything we see in the consumer side sets that up.
Is there a worry about affordability? So we hear it from certain pockets of consumers.
Yeah, and there is. And so this is why you have to sort of sort the aggregate economic impact of the consumer, our 70 million consumer spending, versus the different deciles of income and things like that. But if you sort it into thirds, and our institute that writes on this, the bottom third is growing. It's just growing at a slower rate than the middle third or the top third. And so that's what you hear about the K economy and things like that. The good news is, with the unemployment rate at 4.4% or so, the new claims for unemployment is still at a very low rate nominally compared to where they compare it to 19, but the actual labor force is bigger. Those are all good things. So the people are working, they're getting paid, et cetera, but they are worried about prices and affordability, and I think that will dominate the conversation until it settles in.
You know Kevin Hassett, and you've known him for quite some time. Yeah. What kind of chair do you think he'll be? Will he bow to the president's will?
Well, he's got to be nominated first, so let's let the president do his work and make his decision. But look, I think all the candidates are highly qualified. Our job is to work with them. I think the Fed, as an institution, has to be independent. There's no question that. I think the U.S. Fed is the example for the world of how to run a centralized Federal Reserve with independence. There are parts of it that there's a lot of commentary about the supervisory side and the reach and the activities. That's a separate question. But the Fed independence on monetary policy is key. I think Kevin and all his colleagues that are talked about would all believe that and understand that and drive that.
Brian, there's a lot of geopolitics today. Macron's in China. We have Vladimir Putin over with, Prime Minister Modi in India. There's a lot going on with Ukraine. How do your clients work around this internationally? So you say, some of the tariffs have settled. Yeah. Do they worry about anything more for 2026, or do you think, again, they're ready to do deals? Well,
generally there's things that you look at, you say, I can have an impact on this or control it, or I can make a decision on it, and other ones you can't. And kinetic wars, war in Ukraine, getting the Middle East settled, Israel and the Gaza Strip settled down, the debates around Taiwan, all these things are on people's minds all the time. But the reality is there's not much I can do about it. Trade and tariff is different because that comes down to where they might locate supply chains, how it'll affect the cost of goods sold. And if you watch through the summer, it's become clearer that there's sort of 10 to 15% increase is generally across the board result. That's helped businesses understand it better. And so I think that's been worked into their plans. And that's why you're seeing the relief come off from Liberation Day, where people were very confused, to now people have generally said the issues of China national security and stuff are unique. The issues of solving the Russia-Ukraine war are unique. But I don't think businesses sit there and say if that doesn't solve or does solve, if they're in very specific businesses, yes. But generally, they're more worried about the ability to address markets and drive. And I think one of the things administration's worked on that gets lost in the percentages and count is the non-tariff barriers. And those are real barriers, both in the EU, frankly, through regulation and stuff, and in China and other places. And working on that is important for multinational companies, not only in the United States, but around the world, because to get access to markets without having to change product is a big deal.
Bank of America CEO Brian Moynihan speaking there with Francine Lacroix. Coming up, SoftBank CEO Masayoshi Son hammers out high-tech factory plans with the White House. That and what else is making headlines in your front page news next. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York, and it is time now for your front page news. First up, the Washington Post leading with video footage of the U.S. military strike on alleged drug smugglers in the Caribbean. The video, shown during a day of closed-door meetings on Capitol Hill, shows two people attempting to flip their capsized vessel as they were fatally attacked again. The Post says the footage is considered a crucial piece of evidence in determining whether the strike amounted to a war crime. The attack killed 11 people in total. Next up, the Wall Street Journal reporting SoftBank's Masayoshi Son is working on a plan to build Trump-branded industrial parks around the United States. It'll be funded by money pledged by the Japanese government as part of that recent trade deal. The factories will be built largely on federal land and would produce components for AI infrastructure. And finally, the Financial Times leading with Wall Street banks predicting double-digit gains once again for US stocks next year. The average forecast of 9 major banks is for the S&P 500 to rise more than 10% to 7,500 by the end of the year. All right, let's take a look at those markets, because if we look at today, well, it certainly looks like that might come true. We are certainly on deck for another record today for the S&P 500 with futures pointed higher. And that small gain yesterday, nevertheless, again, we are already at a record for the Russell 2000. Little weight to the Bloomberg US dollar index, and that 10-year yield crept back up to 4.10. The market's nervously awaiting that FOMC meeting next week. Of course, we do get some data today. We obviously have little stale personal income and spending data and then fresh UMich data. Let's take a look at some commodities, because we are seeing gold just up a little bit, back right above 4,200. And then I want to point to copper as well. We're talking to a Citi economist in a moment. Copper is just on its way up, and Citi predicts a bullish season, even more bullish for copper. All right, coming up, we will talk with Citi's Veronica Clark. It's 5:30 a.m. in New York City. Good morning, I'm Bonnie Quinn with your Bloomberg Brief, and here is what you need to know. On track for another record. Futures in the green with September income and spending data on deck, along with a first look at December's UMich survey. Hollywood giants at the negotiating table. Warner Brothers set to be in exclusive talks now with Netflix to sell its film and TV studios and HBO Max streaming service. And Fed Chair frontrunner Kevin Hassett weighing in on next week's FOMC meeting, saying the Fed should and is likely to cut rates by 25 basis points next week. So let's take a look at those markets. As I said, futures are in the green, so there's a little bit of optimism out there on this Friday. The S&P, of course, rose just fractionally yesterday, but it is fractionally in the green for the week off the back of that. The Nasdaq 100 down 0.1% yesterday, but it is firmly in the green, up more than 0.5% already week to date and pointed higher again. So still close to records. As for the Russell, it closed at a record yesterday. So this breadth expanding might just be a little more permanent than it has been in previous sessions. It looks like we might get a positive start to the Russell trading as well. Now, the data today, potentially a little bit misdirecting. We have bonds moving just a little bit, a couple of basis points in yesterday's trade. The 2-year yield at 3.52, close to 3.53, the 10-year yield creeping up, and the 30-year yield also creeping up. But the curve very definitely steeper than it was before this repricing for a 25 basis point cut. I want to point to copper there as well, 11,609 per ton. Citi, as I was saying, it's bullish on copper. It sees prices hitting 13,000 a ton by the second quarter. Bull case is 15,000 on average between Q2 and Q4 for that metal. All right, let's get to some stocks to watch. Valerie Teitel joins us now in London. Valerie.
Good morning, Bonnie. Let's start with a check on the merger that you mentioned, that of Warner Brothers and Netflix. We are seeing Warner Brothers up 1.5% in the pre-market. Netflix, on the other hand, on the downside, down 0.8%. And this comes after some reporting that Netflix has entered into an exclusive deal talks with Warner Brothers. The streaming giant, the world's largest streaming giant, Netflix, is about to get even bigger. Sources telling us here at Bloomberg that a deal could be announced in the coming days. Let's move on to earnings. This one in the AI space. HP Enterprises out with a disappointing outlook when it comes to sales. The shares are in the red this morning, down 9%. They also missed on their sales for the current quarter as well, Vonnie. The CEO is citing some delays in customer contracts, some projects pushed out to 2026, one of those being a delay in a European data center build out, another delay off the back of the U.S. government shutdown. So Hewlett-Packard Enterprises to the downside, down 9% off the back of this disappointing outlook. Lastly, let's end in the beauty sector. Ulta Beauty raising their full year guidance up 5.6%. Their push into K-beauty, into Korean beauty is really paying off for this company. Sales rose around 13% in the previous quarter, also helped by their international business with their recent acquisition of Space NK, one of the largest beauty retailers here in London. Vonnie?
All right, Valerie, thank you so much. Valerie Teitel there. So September PCE, personal income and spending out today, and December UMich survey. Well, the first look at it anyway, coming at 10 Eastern. Here to take us through this and look ahead to next week is Stuart Poll of Bloomberg Economics. So how stale, how relevant is this personal income and spending data? Is there anything we can garner from it?
Well, it is old. The thing that matters most, of course, is that the Fed cares about the core PCE price index. It's a preferred inflation gauge. And it also just closes out our swath of September data. Ultimately, what we're expecting is about a 0.3% month-on-month headline headline PCE inflation print, 0.2% in the core. We're expecting just about 0.3% aggregate labor income growth as growth in wages and salaries. So on an inflation-adjusted basis, it's basically nothing for the month of September. And I think that when the Fed thinks about the potential for a re-acceleration, it's going to look at this personal income and outlays report and see that there's basically very little indication of acceleration going into the government shutdown, which then took a toll on economic activity also.
What about the UMichigan survey? Paul Donovan of UBS this morning saying it's become ludicrously politicized and we can't trust anything about it. I mean, I'm maybe, being a bit too enthusiastic about what he said, but he did put that in there.
Yeah, it is true that, especially when you look at things like inflation expectations, it's really clear that there's a political divide between Republicans who expect basically a lower inflation, Democrats who expect tariffs to take a toll on consumers and to support inflation going forward. What matters most to me in the consumer sentiment surveys is what buying plans look like. Because again, I'm looking for some indication that there could be a re-acceleration in 2026. And if we were to see some additional enthusiasm around buying plans, that could do it. But I'm expecting to see rather dull buying plans, especially for household durables and vehicles.
All right, just on this, I want to hold you for a second, Stuart, and bring in Veronica Clark, now US economist at Citi, who also joins us, and bring her into the conversation. Veronica, anything that Stuart said that you object to, first off?
No. I mean, the September data that we're going to get this morning, it does feel pretty stale at this point. And yeah, PCE inflation is the most interesting, but it's never particularly surprising. We know most of PCE inflation once we get the CPI and PPI data. We really don't learn anything new there. Maybe if there's anything that I'll be looking for in this report, it's spending for September, because we did see softer retail sales in September. So maybe that's the start of a slowdown, but we're coming off of a couple of very strong months of consumption anyway. So probably not too interesting details.
Veronica, consumption was really strong in the summer. It looked like it really cooled down in September. We then had the government shutdown, probably shaving about 1.5 percentage points off of fourth quarter GDP growth. When you start looking at the data that you have at Citi, at what things look like on the spending front coming into the holidays, how did it look? After September, how did it look?
Yeah, we do have some of our credit card data that we try to look at. We don't have, unfortunately, the latest data for that Black Friday, period. It did look like there was still some resilience in October. But yeah, of course, there should be some kind of drag on economic activity from the shutdown. You would expect to see that present as maybe less spending. That's a lot of people who are missing paychecks for a couple weeks there. They would probably be spending less.
Stuart, can I ask you, and Veronica, you can weigh on this as well. The market has totally baked in a price or a 25 basis point cut next week, but we're still in murky waters. There isn't the visibility that we thought we might have, and then we get a whole raft of actual fresh data the following week. So I'm curious, is there a danger that the Fed makes a misstep next week and the market sees ructions the week before the Christmas holiday?
I think that the real risky move would be to fail to deliver on market expectations for a very, very priced-in December cut. It is tricky, though, to manage communications because, as you say, we have this raft of data. We have NFP coming out the next week. We have CPI coming out the next week. So how is the Fed going to hedge against the potential for a surprise in either NFP or CPI the next week? Conventional wisdom is that they're going to try to deliver a hawkish cut, but Veronica, I'm not really sure how the Fed is going to deliver a hawkish cut when the median FOMC member is already showing just 25 basis points of cuts next year.
Right. You really can't do it with the dots. So there's really not a lot of room to believably move more hawkish with those dots as of September. It's got to be in the press conference. But I think, Powell probably, wants to keep optionality. Of course, we're only pricing one more cut by the middle of next year, so there's maybe not necessarily a whole lot to push back on, but it certainly will be a weird meeting. Yeah.
It's going to be strange because also Kevin Hassett came out and sort of, I mean, he's perfectly entitled to give his opinion. He's not, anything to do with the Fed at the moment, but he is sort of the contender to be the front runner, at least for the next Fed chair, undermining a little bit maybe what the Fed chair is going to do next week. Does Powell continue to have credibility until we do have a new nominee and a new Fed chair?
Yeah, I think he will. And yeah, we don't know who that nominee is going to be yet. Certainly the market is expecting that it could be Hassett, and maybe that's worth another cut, 25 basis points, a couple cuts or something. But yeah, I think for now, I mean, the division that we see among the Fed, I don't think it's necessarily political driven or concerns about administration influence. I think it is because the data have been confusing, and there are good arguments to make on both sides.
If we get somebody like Kevin Hassett coming in, do you think that he'll have the, I don't want to say credibility again, but do you think that he'll be able to build a coalition, especially what we know about the next slate of voters coming in from the regional Federal Reserve Bank?
Right.
So we're going to be more hawkish.
Yeah, they do skew a bit more hawkish. It is going to be interesting. If the data are not supporting more rate cuts, the Fed does still make decisions by majority vote, and I think it would be hard to get some of those more hawkish.
Yeah, I mean, what's the risk in that scenario? Do we get a reacceleration of inflation, and does the economy suddenly go on tilt again?
I mean, it does depend, of course, on how the Fed is acting. If we do see some stickiness to inflation data, presumption of a more dovish chair, we've already seen maybe yields, longer end yields move a bit higher, kind of baking that in. If you're not actually getting the rate cuts, then I think it's not really an issue. We're not particularly concerned about a inflation.
Can I ask you about the yield curve? And Stuart, you can weigh in on this as well. What is the recent steepening telling us?
Yeah, I mean, part of it absolutely could be the Fed chair, if it is a particularly less independent Fed, but it's not worth, too many basis points, of course. But yeah, it is just this expectation that debt issuance is going to be larger, but we do have a more dovish Fed.
So the old narrative's creeping back in, but this 2-year yield really stuck around 350. Stuart, the market is telling the Fed, we don't care what you do, we are not sending this terminal rate lower.
I think that's right. Again, I think that markets are just as confused about whether the next chairman can build a coalition as anybody else. I think that even Kevin Hassett is worried about whether he'd be able to build a coalition, and I think that's why that terminal rate has stuck around 3% when we look at what's priced in.
Veronica, just in terms of general growth next year, I know that Citi is looking for a Goldilocks scenario. Not too optimistic, though. Why not? What's to keep us from being optimistic? I mean, the tariffs don't seem to be taking too much of a bite. Yeah. Sure, a little bit of weak economic data in the labour market, but maybe it'll all turn out okay in the week of December 16th.
It is that labour market. There do kind of seem to be two camps right now. People who maybe expect some more slowing, which is kind of where we would lie, and then group expecting maybe this acceleration, and there very much are positive stories that you can tell around business investment, AI-related investment, but consumption is still 70% of GDP, and if the labor market is really slowing and people's take-home labor incomes are slowing because of that, that is a big headwind for consumption.
Well, that was so fun, you two. Thank you so much. Much appreciated both your time. That is Stuart Paul, of course, of Bloomberg Economics, and Veronica Clark of Citi joining us today. Now to other top stories trending on the terminal this morning. Nvidia challenger Moore Threads Technology jumping 425% in its Shanghai trading debut after raising $1.13 billion. That marks the biggest first-day pop for a major IPO since China's 2019 reforms. The company's listing comes as optimism over China's drive for tech self-sufficiency intensifies. Cristiano Ronaldo bets on AI. He has taken a stake in Perplexity AI, making the most high-profile investment for him to date. Until recently, he's primarily invested in his homeland of Portugal, focusing on smaller businesses. A BlackRock Bitcoin ETF recording its longest streak of weekly withdrawals since debuting in January of 2024. Investors yanked more than $2.7 billion over the 5 weeks to November 28th from the iShares Bitcoin Trust, or IBIT. The ETF is now on pace for a 6th straight week of net outflows. Coming up, a potential seismic shift in Hollywood. Warner Brothers now in exclusive talks with Netflix. More on that next. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. The US has lobbied some EU nations to block its plan to use frozen Russian central bank assets to back a massive loan to Ukraine. This is according to European diplomats familiar with the matter. Kate Ackley of Bloomberg Government joins us now from Washington for more. So, Kate, this apparently is true. The US has been lobbying some European governments. Will it have any success? Does the US have leverage, or can it threaten European governments in order for them to not back this plan?
Well, I mean, the U.S. officials are saying, according to our colleagues reporting, that this is all in an effort to try to, secure these assets to help bring peace between Ukraine and Russia. This is a very sensitive time for Ukraine. Obviously, we've seen in the United States our Congress, the administration being much less willing to provide aid to Ukraine. So they're really, for lack of a better term, sort of cash strapped amid these discussions and these negotiations.
Yeah, exactly. Well, domestically, Pete Hegseth, who keeps getting into trouble, is maintaining Trump's favor, it seems, for now. Fresh missteps with the signal messages and so on. And this is really, different to Trump's first term, where if somebody displeased him or made a misstep, they tended to be gone. Can Hegseth ride out this criticism and even potential legal action here?
Well, this is the President Donald Trump, who was famous for saying, "You're fired," right, on The Apprentice. So we saw certainly all through his first term an interest in kind of saying, "You're fired." There's a real sense of loyalty, though, now in this second, Trump 2.0 administration. And as of now, that's what we've seen, where he is standing by Hegseth despite obviously mounting criticism from Democrats. That's not really going to probably move this administration and this president. There's more sort of quiet opposition among some Republican members of Congress, especially those who are planning to retire, not running for re-election. So you see a little bit more slipping out, a little bit more division. But you're absolutely right. So far, the president has been sticking with Secretary Hegseth.
So we have the story today from the Wall Street Journal reporting that Masayoshi Son is hammering out a plan with the White House for high-tech factories. And apparently, it was a very sort of almost sci-fi type plan where he wanted factories on federal land, the size of Los Angeles in one telling of the story. What do we know about this?
Well, these would be Trump-branded, high-tech, sort of factories, but almost like you're saying, villages or campus or something, Trump branded. And so the response from the White House is not a no. It sounds like this is something that President Trump is interested in. I think the official comment from the White House was just noting that this is a president who uses his business contacts globally to bring economic things into the United States. So it was certainly a warm reception, I would say, in the official comments from the White House.
And then, Kate, I do want to ask you about the SCOTUS decision. So it looks like Texas now can use a new Republican-drawn map. It puts 5 House seats into play for the Republicans. And we have Liberal Justices Kagan, Sotomayor and Ketanji Brown Jackson saying it's probably an unconstitutional racial gerrymander. But the challengers didn't produce an alternative map, and that was one of the reasons why the Supreme Court decided this way. What is the outcome generally, though, given that these 5 House seats might be in play, but also we had a similar type of thing going on in California, which maybe levels out the playing field?
Right. I mean, that's what we're seeing as we head into next year and the 2026 midterm elections. A big part of these races are going to be won or lost on redistricting and how these different states can redraw the lines to give their party an advantage. And so you're right. You're seeing in California, Democrats trying to give their party the advantage. Texas, there's been a little bit of whiplash with Texas thinking, oh, they're not going to be able to use those redrawn lines. Now the Supreme Court saying that's okay. We still are seeing pressure from from President Trump and other Republicans on Indiana to also redraw their congressional lines to hopefully for them get more Republican seats out of that state. So you're seeing this across the country.
Yes.
And I think you'll see it through into next year as people start tuning into the midterms.
Kate Ackley, thank you so much. That's Kate Ackley of Bloomberg Government in Washington. Now back to our top headline. Warner Brothers said to have begun exclusive talks now with Netflix to sell its film and TV studios as well as its HBO Max streaming service. Let's bring in Bloomberg's Lonnie Prinsloo. So Lonnie, what do we know about these talks now that they seem to be exclusive talks?
Hi, yes. So basically, if these talks do not fall apart in coming days, we can have an announcement that this is actually happening. Of course, that will come with a lot of regulatory concerns, both in the US and the EU. So we'll see how that goes. Our competitors such as Paramount are already unhappy. They've been writing letters saying their proposals are better in terms of regulatory hurdles, and that the bidding process was skewed towards Netflix taking the lead on this.
Yes, and everything could change. We have to put that in as a caveat. But if it doesn't, and if there does end up being an agreement between Netflix and Warner Brothers, how might that change the sector as a whole?
It will turn it on its head, basically. It will be the biggest deal that Netflix has done by far. It will give it access to a whole lot of studios from Burberry to California, powerful content of the HBO network, The Sopranos, White Lotus, TV library that includes things like Friends and Harry Potter. So a combined sort of subscription base of more than 400 million people. So it really is going to turn the industry on its head if it does go ahead.
Yeah.
We've had a number of A-listers. We've had a number of A-listers actually now writing to Congress, also saying that they are concerned about the theatrical film's survival, with Netflix basically moving content from the theaters to the platform, the HBO platform, Netflix HBO platform, quicker than usual. So yes, many people have concerns about if this happens, but it will definitely be a huge deal to watch out for.
Netflix making the argument that if it happens, it'll be better for the consumer because they can bundle. But, you know, of course they would say that. Bloomberg's Lonnie Prinsloo, thank you so much for the update. Coming up, data on deck will get you set up for your Friday trading session. This is Bloomberg. This is Bloomberg Brief. I'm Vonnie Quinn in New York. Now a look at what's ahead today for your Friday trading session. Victoria's Secret's reporting earnings before the bell. Plus we get more economic data. We have PCE, personal income and spending, although that's for September. That's at 10 a.m. Eastern, along with University of Michigan sentiment data, the preliminary December reading at 10 a.m. Let's take a look at some movers pre-market now. Warner Brothers. Reports are that it's begun exclusive deal talks with just Netflix. That's not pleasing everybody. That stock down about 1.1%. Hewlett-Packard Enterprise, well, that outlook really severely disappointed on slower server deals. It's down almost 9% in the pre-market. Different story for Ulta Beauty, though. It has been outperforming, and it raised its full-year outlook again as cosmetics demand stays robust. A little bit cheaper, maybe, to buy something in the cosmetic store than elsewhere. This is your macro picture for Friday. Futures are at session highs now. We are eking out a gain already for the week on the S&P 500. We are at a record for the Russell 2000. Dr. Copper also up 1.3% on stockpiling in the US ahead of tariffs and so on. And that two-year yield not budging, but it is well above 350. That's it for Bloomberg Brief.